Hello, my name is Mimi Joy, and I'm the head of partnerships at the Financial Health Network. I'm excited to introduce the panelists for our discussion on building a financial health business. With the pandemic and resulting economic crisis, consumer financial health has become a priority for many organizations. We will hear from TD Bank, Servus Credit Union, and the fintech MX, who are all leaders in financial health measurement, which I'll explain in more detail, as well as members of the Financial Health Network. Financial institutions and fintechs are among the important group of economic first responders during the current crisis and need good decision-making data to support their customers' needs. Financial health measurement and other types of data, such as transactional, payments, and behavioral data, have the ability to provide a clear perspective on consumer financial needs and reveal the nuances across Canadian regions and subgroups. During our discussion, we'll explore what it means to be in the business of financial health, starting with a broad view of financial health in Canada and the impact of COVID-19, discuss regional and organizational insights, followed by details on customer and member experiences. And now I would like to welcome our panelists, Atul Varde, who is the Chief Information and Payments Officer at Servus Credit Union based in Edmonton. Atul provides strategic technology management and payments leadership to the organization and is responsible for ensuring that IT investments possess an appropriate risk-return profile while being aligned with the overall business strategy. Prior to joining Servus, Atul served as the CIO Payments Lead Executive at two of Canada's largest credit unions, Affinity and Vancity. Also joining the discussion is Jennifer Lang, VP of Customer Experience, Innovations and Insights at TD Bank. She is based in Toronto. In this role, Jennifer is accountable for TD's overarching customer experience, enterprise vision, strategy, and the management and integrity of TD's CX measurement programs. She leads the ongoing evolution of CX capabilities, insights, and analytics. Jen is also responsible for the CX innovation and trends practice, TD's COE on consumer behavior, as well as the consumer insights function, which supports marketing in all businesses and channels. And next is Jane Barratt, the Chief Advocacy Officer at MX, a software as a service company that builds data-driven products for banks, credit unions, and fintech innovators, and is based in the US. MX serves over 2,000 customers in Canada and the US, and Jane is a longtime champion of financial strength. In her role at MX, Jane works with government and regulatory bodies, financial institutions, and industry groups to ensure people have access to their financial data. She advocates for financial education through her courses on LinkedIn Learning, and previous to joining MX, Jane was the founder and CEO of Goldbeam, who has spent 2 decades driving growth for Fortune 500 companies. So I'm going to just give a quick overview on my organization, the Financial Health Network. We are a US-based nonprofit with the mission to improve financial health for all. And our work takes us into the Canadian market, the European market, as well as Australia. Financial health really matters more than ever in the wake of COVID-19, and integrating financial solutions into your organization enables you to build your business, increasing customer engagement, loyalty, long-term revenue, all while improving the financial health of those you're serving. So you've heard me say financial health. What is it? There are multiple terms in the industry: financial well-being, financial wellness. But at the Financial Health Network, we have focused on the concept of just financial health. Comes about when your financial systems help you build resilience and pursue opportunities. But how do we know what it is? How do we diagnose it? Well, through years of research, we have distilled that into a measurement framework, where we have created a survey tool that TD, MX, and Servus have all deployed to measure the financial health of customers and members It can also be used to analyze the financial health of employees. And it breaks down into 4 areas of spend, save, borrow, and plan. So the survey questions cover those 4 key areas. And once the respondent answers the questions, the responses are scored and they're tiered into a category of financially vulnerable, financially coping, or financially healthy. And then based on that, there are strategic initiatives that you can create to not only to understand that data, but to use it to help you develop products and services to meet the needs of your customers and members. So from here, I'd like to really turn this over to our panelists to talk about data strategically, and then we're going to dive into what financial health across Canada looks like pre, post-COVID, and some great insights from our team. So Jane, would you like to take us away in terms of just understanding consumer data?
Absolutely. So thank you, Mimi, for hosting today. Thanks to the Financial Health Network and to Payments Canada for this wonderful event. As Mimi said, I'm Jane Barratt, Chief Advocacy Officer at MX. And when, at our core, we are a data company. And I think one of the main things to really kind of land is the idea that data is money. Right? It's not some separate thing. The way that people access and share and manage their money is through data, right? We've made that leap a long, long time ago. So it's always great to really think about, okay, our role collectively as both data experts and financial services experts is to how do we use that data for good? Right? How do we use it for the benefit of end customers? And that really is the mission of MX. It's empowering the world to be financially strong. And step 1 of empowering that strength is just being able to, access and share and use that data that represents your money. To date, and I know you sort of referenced it there, I spent multiple decades in the marketing world, and to date, data really was just used to sell people more stuff. Right? Let's take your data, profile you, stick you into a segment, and go hard against share of wallet. And that is, and I saw it firsthand, real time, especially through, the rise of digital, the massive amounts of value extracted out of people's data without any value really being given back. And so having this idea of, what we do at MX, which is, it's all about customer permissioning. How do we reduce data exhaust out in the ecosystem? And then, ultimately, how do we connect people's data? How do we enable them to permission connected data? What do we do with that? So enhance it and make it usable, because we're still kind of in a little bit of a prehistoric age in terms of what raw data looks like. It's built on very old systems. So how do we take raw data and make it usable? And then how do we use it, put it to work through software platforms, both internal and external, to really allow people to manage their money. Going back to data was used to just sell people more stuff. I truly believe we're at an inflection point for the industry, which is a wonderful place if we can get to, which is win-win. Let's use the data for, positive outcomes for customers and members, and let's use that data for positive outcomes for institutions that serve them. And, for us to get to that inflection point, it really does take a massive shift in what we, how we look at data, what we do with that data. And I think the work that the Financial Health Network does, especially in terms of really breaking data out from raw data into this is where people are, is such a great roadmap for, what we use data for moving forward.
So Jen and Atul, would love to hear some perspective from your organizations at TD and Servus, and how you look at data and how you're leveraging the financial health measurement.
Okay, I could go first. Good morning or good afternoon, as the case might be. So glad to be here. Payments is really money movement. And so the better, the more completely, the more accurately we can measure money movement, the better these metrics get in terms of financial health, spend, save, borrow, plan, all of that gets better. So there's something to be said about payments contributing hugely to data quality, which in turn has a direct connection to financial fitness or financial health. At Servus Credit Union, shaping member financial fitness is what we call our noble purpose. So our initiatives and operations are designed to improve members' ability to spend, save, borrow, and plan. If I can look forward a bit to a world which in Canada that features a secure open banking ecosystem, I really look forward to that, because we would see a more complete, more current financial picture for members and consumers across financial institutions, across accounts, covering deposits, loans, cards, wealth management, fixed assets. And I do believe that would lead to more actionable, more timely insights to nudge desirable financial behavior, which should result in much better financial fitness. So really look forward to that. There's some enabling technologies to support that open banking world. Digital ID comes to mind. And if properly implemented, that's one of the situations where you can actually have more security and more convenience at the same time. So really look forward to enabling and promoting some of those changes to take us to that future of higher data quality. And to Jane's point, data for good.
Thanks so much, Atul. And Jen, I know you've talked about, the burden isn't entirely with financial institutions to solve all the financial health challenges, but would love to hear your perspective from TD.
Sure. Thanks, Mimi. And I think Jane and Atul have talked a lot about the value and the impact we can have with data. And I think organizations that have first-party data in particular have a real opportunity to help customers using that data. When I think about data for us at TD, I think about a couple of different types of data. We've started to talk about the value of transactional behavioral data. I think that's foundational to helping us understand where our customers are, what they're doing, and how those behaviors impact their overall financial health. But what one of the challenges is with transactional data is that no one institution has the entire picture of any given customer. 70% of Canadians deal with more than one FI, and that's just for retail banking. So you add on wealth, you add on insurance, there's quite a variety of institutions that people are using to serve their needs. And so, having a rounded picture, I agree, I think open banking is going to bring a lot of opportunity for all of us to have a broader holistic picture. I also think the transactional data doesn't always tell us what is driving the behaviors. And we've seen that there's another type of data that's become actually more important through COVID. And so transaction is the foundation, but consumer sentiment and consumer attitudes, how they're feeling about their financial circumstance is actually almost as important. What we've seen in some of our data analysis is that our behavioral data might suggest that someone has really good financial health. They have really good money management behaviors. But when the individual, sometimes they themselves don't feel confident in their financial health. We've also seen the reverse, where someone is really confident that they're in a good circumstance, they've got great health, but the behavioral data might suggest something otherwise. And so for me and for at TD, how we look at it is, really having a financial health measurement that combines both quantitative transactional data as well as the attitudinal sentiment data really provides us with a much more complete picture of someone's financial health and circumstance. And that's really what we've been building out over the last number of years so that we can have that, as much as possible, given the data we have, a more holistic picture of customers' health.
And we realize that financial health is not only having access to high quality products and services, but another component of that is the support of good social programs, as well as just being able to make a living wage, that there are multiple facets that make up financial health. But it's so interesting to see what your organizations are doing to just analyze this data and create really innovative products and services.
If I could add to that, this is a really interesting component of the whole data space to go beyond, to Jen's point, to go beyond transactional data and to add more context to it. And, just to better understand needs, wants, hopes, dreams, fears, blind spots, assumptions, influences. I mean, that is... that is when I think you make the leap to predictive value, to just-in-time nudges, being there before something negative happens and to turn things around.
Shall we take a look at some of the Canadian specific data?
Yeah, why don't we pull up some of the data. So in 2019, what we did at TD is we actually commissioned a Canada-wide study. There's a lot of data available in the US on financial health, but there actually isn't a great deal of Canada-wide data. And so we saw this gap and we said, look, if we really want to understand how we're doing in terms of Canadians, what more we can do as institutions. We commissioned this in 2019. It was before the pandemic. So this is a view of what we looked like as a country prior to the pandemic with 10,000 Canadians. And so here's where we land. And it actually is very consistent with the US. We have about 15% of the Canadian population that is actually classified as financially vulnerable. That's 4.5 million Canadians are actually in the vulnerable category. And then if you actually look at the spectrum, you've got about a quarter that are financially coping, but it's a little lower. So they're struggling in many aspects of financial health that Mimi covered in the framework. And then you move into about a third who are coping, but high. So they're doing okay in some areas, but they might be struggling in one or two of those areas. So it could be spend, it could be borrow, it could be plan. And then you've got about a quarter who are actually healthy. So 8 million Canadians are actually healthy. So this was the landscape that we were operating in 2019 in May prior to the pandemic. I think it's great to look at aggregate results, but what you don't see in the aggregate data, as with all data, is you don't see the nuances of what's underneath this data. And so really importantly, if we look at what's happening across some key subgroups, there's actually some really important nuances. And so on the left, you see here's the overall profile of Canada, but you see some gender differences. So you see slightly higher vulnerability, less financially healthy among women versus men. But if you actually look at some of the diverse communities, there's actually some that are actually disproportionately impacted or have disproportionately low financial health. And so you look at, new to Canada, LGBTQ2+, Indigenous, and people with disabilities. These groups already reported lower financial health back in 2019. And we're going to look at what's happened through COVID, but really understanding some of these nuances is important as we think about the customers we're serving and what they need from us, regardless of if you're a bank, if you're a credit union, if you're a fintech, if you're a community organization, our consumers will need something different from us. If we look regionally, there's also nuances. And I know Atul is going to speak to this a bit more, but even in 2019, we saw that Alberta, Manitoba, and Atlantic actually had lower financial health relative to other provinces. And so there are dynamic market dynamics, consumer dynamics that we really do need to pay attention to and take into consideration. And so maybe with that, Atul, maybe we could talk a little bit about the Alberta market before we get into COVID.
Absolutely. So as you can see, Alberta certainly had a significant impact. You can see the 19% going to a whopping 50. And I think we have a subsequent slide that gives a bit of context to this story. So this is the GDP trend in Alberta relative to the rest of Canada or to the whole of Canada, and going back several years, starting with 2015. So you can see here that the Alberta economy was struggling even prior to COVID-19. And obviously, oil and gas has a lot to do with that. And so, the pandemic in Alberta essentially is a story of coping with two concurrent challenges. So certainly a bit of an outlier in that respect, which this data clearly illustrates. And we have a subsequent slide. So this goes back to a survey from the summer of 2020 when both service members and Albertans talked about the possibility of job loss or hours cut. This was closely followed by struggling with mental health issues, which obviously has a connection with the stress brought about by the pandemic. So you can see some of these worries quite legitimately being there as the pandemic unfolded. And we've got another slide after this that this obviously is on a much more hopeful note. Although many Albertans are struggling, they have been very creative and found new ways to to essentially find money, make their money work harder, and in some cases even find new income sources. So there's something very hopeful here about the resilience of Albertans and their innate entrepreneurial nature, if you wish, and I take a lot of hope in that. Look forward to increasing diversification of the provincial economy, and to us, to financial institutions, being enablers and promoters of the resurgence in economic growth that we hope and believe lies ahead.
That's great. Yeah, I mean, I can add some color from an MX perspective, and these are both such great data sets on top of the Financial Health Network overviews. So thank you for sharing those. We have tens of millions of people on our platform and have been, tracking over time what is evolving, sort of pre-COVID, during COVID, and now potentially, well, definitely in the US, a little more coming out of COVID. But I mean, I think 3 observations. One is that personal finance, the problem with personal finance is that it's personal, but no man or woman is an island. So there is this sense of, when you look at and you have an individual report, it often is exactly as you'd called out, Jennifer, how people feel, not necessarily what the numbers say. And so, having the numbers on both the sort of the personal level and then at the shared accounts, often you do get 2 very different pictures. If you look at one single slice of a person's account, it may be like, oh, that credit card's sky high, but then they aggregate other accounts and you're like, oh, you got some serious investments over there. And that's clearly your primary account. And this was just a smaller one. So that's sort of one observation, is just opening up the lens that you really can do through data. I think the second thing we've seen on our platform is almost like a divergence. People who may have been healthy got a lot healthier, right? So people who already had good practices and, kept their income through COVID, there was like a massive sort of uptick in terms of savings and reduction in debt. People who were on the other end of the scale that were less healthy got a lot less healthy. And I think it's harder to show in numbers and pie charts and bar charts, but just that divergence, even if, and we saw in Alberta that massive shift to 50% unhealthy. It is, the impact of that. Again, I truly do believe that financial services is a force for good, and for the role that we all have in terms of, servicing both that high-end healthy end of the market as well as the less healthy end. But I think, the practice that people now have in terms of aggregating accounts gives us all such great tools to get that, 360 view and much better insight into how to help them better.
I would echo exactly what you've said, Jane. I think if we can pull up that one slide, I know I just want to show the one around the impact of COVID on these communities, because I think collectively the power of our organizations and community organizations is how will we help the communities that we know are going to be most vulnerable. I think it's the next slide. And how can we together help them out of the impacts of COVID? So if you look at this, what we can see, we saw Alberta, but look at people with disabilities, look at the Indigenous community, and look at the Black communities, and even Filipino. Like, the massive increase in vulnerable populations amongst these communities should give us all concern, because you're right, there is a portion of the population that are so much better off because they haven't been spending, they've been able to save, and we must serve their needs, absolutely. But what will we collectively do together to help those most vulnerable? If you think about the K-shaped recovery we keep hearing about, there is going to be a widening divide. Those who are doing well will do much better. But our collective power, and how do we come together using the data we have and the services that we offer, because each organization brings a different strength. The banks, the credit unions have scale, a broad suite of products. The fintechs have agility and exceptional experience in addressing consumer pain points. And community orgs provide other financial supports, credit counseling, and connections outside of banking. I think together, we need to help these communities, and how can we work differently together from a partnering perspective, from with open banking, there'll be more data sharing, but I really want us to think about what more we could do as an industry to support those we know will be challenged for some time, coming out of COVID.
And financial health measurement is a great engagement tool at the member and customer level as well. It's a great way to open a conversation. To Jane's point earlier, for a long time, the data was used just in terms of how do we position more products. We know both your organizations have moved well beyond that, but as you measure it, and it's a great engagement tool, even at the branch level or digitally, just to say, let's start with the conversation about your financial health and then talk about how we can help you.
I completely agree. There's been quite the polarization in terms of what Jane described over there. And I think some of the asset price inflation that we've seen in the last 14 months, and it's quite secular, it cuts across real estate and equities and that sort of thing, has obviously contributed to that polarization as well. So that is something we're going to have to deal with going forward, and especially when it comes to housing affordability in certain key markets in this country, and especially as it impacts younger cohorts.
I think Shannon has a good question that she's posted here, which is, are there any specific initiatives that we're aware of that are addressing some of the challenges among these populations? So, for example, LGBTQ2+, that maybe inspire us and think that we need more of in Canada. So I don't know if I saw this question. I thought it was a great question for us to maybe ponder. I think for TD, what we've done, these top level results, give us a view of what's happening. What we've done subsequent to this body of work, we've been obviously tracking, but we've actually started to do deep dives among these communities, because even within the Black communities, plural, there are different needs, there are different challenges. And so we've gone deeper with PWD, Indigenous, even LGBTQ2+. We've looked at the trans communities, the two-spirited communities, because what they need and the barriers they're facing are different. And so with that work, we're then informing what organizations, community orgs, should we be working with more closely? Which groups have food insecurity? Where can we provide more financial health and education? And so I think what we've done is look to the communities to better understand their needs, and then we're deploying very specific kind of solutions to try to help those communities.
And we've also had a question here about the financial health by age group, and I believe it's on one of these slides, Jen. Should I go backwards?
I'm not sure I pulled in the age on this summarized slide, but we publicly released this data, so I'm happy to send the link through to anyone who's interested in the full results that we published, because we thought it would help the overall industry. And yes, there are age cuts. I think what's happening with COVID, right? Some of the younger cohorts have actually been disproportionately impacted given the work and the roles that they've had. And so happy to share some of the data that we've seen, but there are definitely some age nuances along with the ones we've shared.
And Jane, I imagine you're seeing that in other markets as well, the difference between the age groups.
No, absolutely. I think the age groups is, and especially from a COVID perspective, people who are already struggling in terms of student loans, for example, at entry level salaries have really been impacted significantly. But I did want to go back to one thing that Jennifer just said. I think there was a really great specific question around how to service individual groups. And in honor of Pride Month, I think I do want to call out there has been a number of wonderful initiatives around, retiring dead names and using real names for the trans community especially. And I think, it just started almost like, I think 2 summers ago, it was a concept. And to see this like rolling out of real names on credit cards is such a huge, it may not feel like a big leap forward. It's a huge leap forward for people who use it, because at every time that card is handed over, they're vulnerable if it's like their dead name on the front. So I feel like that is a great example of, the industry coming together, the card providers leading, many different institutions adopting this. So, and then there is also the rise of more affinity-based, both neobanks, fintechs, as well as, again, like products within institutions like the cards, which has been just such a huge, again, this is not decades in the making. This is in the last few years to see this all coming to life. So I'm very hopeful about that in terms of inclusion across the board, because often you do see innovation in fintech that then gets adopted as mass practice. So that's, again, another good reason to be hopeful.
Thanks, Jane. And, there are a lot of other things happening that sort of have this confluence with financial health. And we've touched on open banking as well as I've been watching just the world of embedded finance, that frictionless transaction, and what are the implications there? Because it makes for a great consumer experience, but do consumers at that same time really understand what they're signing up for? So would love to get your perspectives on either of those topics and just how you think that will work to the favor or disfavor of consumers.
Yeah, I'm happy to kick off just with this thought of, big data has always been put out there as a boogeyman, which is not, unrealistic or unwarranted. But again, the amount of market cap that's been generated by using people's data, I think sometimes the idea of secure data sharing gets sort of squished into, we're just going to take credentials out of the ecosystem and people can enable certain activities. What is not seen is the massive impact in terms of the reduction of data exhaust out there. And data exhaust isn't just used for marketing purposes. Like, we generally do not know as an industry what nefarious, actors are getting access to people's financial data. And so from an MX perspective, we've always been very thoughtful around just how we consolidate, de-identify, make sure that data sets can't be used against, say, a protected class, for example. So is there identifiers in people's data that will say, they're from this community, or they're that gender, or they're that. So, pulling out identifiers around discrimination. But in the even bigger piece, if you can get your financial data out of the data exhaust ecosystem, that's a huge win for you individual, for the communities, for the economy, because at that point, the only people profiting are, people who are extracting value, nefarious actors potentially, and, data that could be used against you in terms of profiling for a job or profiling for, credit. There's so many things out there. So that's sort of my big picture. I spend a lot of time in the open banking world. And again, I am very excited about just, let's take, credentials out, let's enable better use cases. But what's happening behind the scenes is just as profound, if not more so.
I'll maybe just give one example here. Let's talk buy now, pay later. It's been quite the phenomenon over the last year and a half or so, with accelerated adoption in North America. And for those of you that may be unfamiliar with it, think digital installment loan at the point of sale. So very slick digital interface. And I think in certain situations, it can actually be absolutely the right thing to do. But again, if you don't have context, if you don't have current and complete data sets, you could actually end up piling on a lot of debt. So some feedback as to what your total debt exposure is through this channel. And I just use that as an example. I don't mean to pick on one modality. I think that's, again, is a place where this holistic view, having the current and complete picture, would help. Because, and I think I've said this before, there's a fine line between that smooth, the frictionless user experience and a slippery slope. So, somewhere in there is a happy medium that gives people that just-in-time, actionable, aligned feedback so they can do what's right for their financial situation.
Yeah, I could not agree more. I think that is the fine balance of a really great experience and making it easy and making sure people understand the potential impacts. I think I see a lot of parallels between financial services and healthcare. If we think about the trends we've seen in healthcare, consumers are increasingly expecting a high degree of transparency on their data, their tests, their results. We track everything we do, from sleeping to walking to oxygen levels to heart rate, because we want to know. And I think we're going to see that. We were already starting to see that desire in financial services. But data without context and guidance and advice can be really overwhelming and sometimes damaging. And so how do we all, as we build amazing experiences, make things simple, give access to consumers, how do we help them understand what does all the data elements mean for them, and what can they ultimately do to improve their circumstance? I think collectively is something we could do and build into the design when we're thinking about building products and services and experiences, so that they actually understand that broader impact. But I expect to see a lot of the same trends we see in healthcare, for sure.
Thank you, Jen. You also made a good point when we were preparing, is that, a lot of times when we look at this data, the event has already happened. What we're looking at is we're looking backwards. And I think what's important about this conversation, and you've all sort of gotten to this one point or another, is that we're trying to look forward. How do we use this to really drive better outcomes going forward, right? And as a recap, in terms of just broadly the data, aggregate data is helpful looking across Canada, but to really make a difference, you've got to sort of drill down on the specific needs of different populations. And I'd be curious to know what you are each most hopeful about, given that we're sort of coming on to hopefully the other side of COVID, but where, pie in the sky, what would you love to see? And more practically, perhaps, what are you seeing on the horizon that's a possibility? And I think I'll start with Jane and then turn it over to.
Sorry about that. I think this idea that we have self-driving cars, right? We can trust machines driving at 100 kilometers an hour down the highway, but we still need to manage our money through a mixture of apps and Excel spreadsheet and good old trusty pen and paper. So I am very hopeful about the concept of self-driving money, right? But not just for the sake of frictionless and making it less time consuming. Truly from the perspective of being predictive and helpful and going towards better outcomes. And I think a lot of things still need to happen to really bring people into that concept of self-driving money. And it was an announcement in the US yesterday, but Ally, which is probably the first of the neobanks, dropped their overdraft fees forever, or for coming out of COVID. Others have put them back in. They're like, no, we're no longer going to have overdraft fees. Just that one move brings in people who are in maybe parallel financial lives, relying on cash checkers and, cash to be able to, okay, now I can actually have an account that won't be as predatory. And then once you've got that, then you can get access to the tools like the self-driving money tools and behavioral prompts and real-time advice to help you move your financial life forward. But it's not just a technology solve. It's definitely an ecosystem solve. And the more we can move away from predatory practices into more win-win outcomes, like that's when the self-driving money and more positive outcomes for more people can come to life. So that's what I'm hopeful about and what gets me up every day.
Thanks, Jane. What about you, Jen? And then Atul, you'll be next.
Yeah, I think I'm hopeful. One of the partnerships that we've already seen unfold even over the last few years, if you actually look at every institution, you'll see a lot of great partnerships, all to the benefit and to serve customers. And so what we'll see is definitely more of that and in service of the customer. I am also hopeful that the pandemic has shined a spotlight on some of the issues that already existed in our society and the divides that we're seeing that have been exacerbated. I'm hopeful that we will create more empathy and understanding across the collective, population and start to work together more on trying to solve. Financial health, I think, is pivotal. We know it's so important to even physical health. There's a very strong link between financial and physical health. And how do we just raise, the financial health and physical health for all Canadians? I think there's a huge opportunity right now. And I think COVID has revealed a lot for us. And with open banking and more partnerships, I just think we're on the precipice of, a lot of great outcomes potentially and great work that will support ultimately better outcomes for consumers and Canadians.
So lots to be hopeful about. I do believe, at least that's what the data tells us, there's a lot of accumulated cash over the last little while. And, as that gets spent, it is hopefully going to trigger a resurgent economic growth. So look forward to all the positive effects that that would create. One would think that having gone through the experience of the last 15 months, many would have understood firsthand the importance of an emergency savings fund. And that would become almost institutionalized for a lot of people in society, which would be a good thing. Many also hopefully would sort of embrace the idea of personalized, systematic financial planning. And to the extent that happens, that would be a good thing for financial fitness. I'm going to put my engineering hat on now and allow me to indulge in a bit of technological speculation here. There's been developments around the world in terms of central bank digital currencies. In many ways, to the extent that some of these solutions come to market, we will be re-engineering the notion of money. In fact, I think personally, I think I have a much better understanding of money over the last 15 months than I ever did before. And so when you look at these central bank digital currencies and the notion of programmable money, I didn't come up with that. That's actually a notion that you actually have control over. You can put an expiry date on these tokens. You can say it can only be spent on essentials and not on other things. So you can actually nudge people, or more than nudge people, to spend the money and not hoard it, which again has positive effects. I think there are concerns with that approach, no question, but there's also benefits. It's like a dual use technology, like a lot of other things. There's also, so shift gears now, there's as a significant chunk of the population enters its retirement years, there's a lot of innovation happening in the decumulation space to help people manage their corpus of retirement funds and make it last for their lifetime. It's actually a very tricky problem to solve. But just in the last few days, there's been products launched in Canada, and I see that as the beginning of a hopeful trend. So lots to look forward to.
Thank you, Atul. We have, and each of you have sort of touched on this question, but we do have a question in our chat about specifically in Canada, how to move the industry forward in terms of financial health. The questioner recognizes that there's perhaps been more attention in the US, or at least more visibility, and would love to get each of your perspectives on just, with all these great ideas, what's a next step? I know from my perspective, we have leapfrogged over having to explain financial health in conversations to now, what do we do about it? And Atul, you brought up the emergency savings, how critical that is for an unexpected financial shock. But what else do you think is needed in the Canadian ecosystem to just programmatically move this forward? Would love to get your perspective.
I can maybe start, and I'm going to pick up on something Jane said. Increasingly, our most effective solutions are becoming platform plays. They're ecosystem solutions. They're not necessarily solutions that are invented at one particular financial institution. So I see that as a really hopeful sign. It's quite evident from this dialogue, this presentation itself, that we're using the same financial fitness framework as TD. So there's a lot of alignment happening there. There's a lot more collaboration happening there. So that's a really hopeful sign in terms of aligning our collective resources to move the needle on financial fitness for Canadians.
And I think there's also been, there's been a gap between expectation and reality that is rapidly closing. I know we did some research last year, and this was Canadian specific, that said that 79% of people said that they expected their financial institution to help them understand how to invest and grow their money. But there was a lot, and then even from an institutional side, 75% said we're doing that. We're shifting our focus more towards financial wellness of our customers and financial well-being. But then the actual taking action, so we went in from concept to action, the actual action gap, it went down to like 42% were actually doing something. But I would say 42% is a huge leap forward from even a few years ago, where it was in probably single digits, because it was very easy, to say on an investor call or in a, letter out to customers that, your financial health is our number one priority, but there was no infrastructure around it. And I think the infrastructure is coming, and sort of that step one is, here's where we are as a company, as a country, and here's where we are as a company, and where's the delta. And I know, again, at MX, we've cross-referenced financial health network data to our own platform level data to survey data. And even just to go through that experience for one of our institutions was mind-blowing. And there's so much more of that going on now. And then it goes through to, again, to product level and conceptual level solves. But as a country, there does need to be massive, just like ecosystem collaboration, which is hard. I don't know if you could tell, but I'm originally Australian, and the Australian banking system is very similar to Canadian in that there's, Big Five and then lots of credit unions and sort of a very well distributed, but so much of the focus has been around Big Five. And to see the innovation in Australia, frankly, in the long tail in the US and within even the credit union space in Canada, to see the innovation and the push towards these better solutions at scale, not just concentrated in the Big Five, has been huge. So I think it is, it's institution level, it's, groups like the Financial Health Network, it's frankly a regulatory and a policy initiative as well that needs to be taking this on. And then at the end of the day, moving away from predatory practices, which tend to be the easiest for people to access, that's where you really start to see the shift. But there isn't one check-a-box solve, and I wish I could say there was, or a magic wand.
Right, we're managing through a whole spectrum. It's not one thing that'll move the needle, but lots of smaller and sometimes larger things. And speaking of check cashing, we have a question from our audience just specifically about the Gen Pop data, Jen, and the increasing number of folks that fall into the financially vulnerable category, and just what are we seeing in terms of the use of payday lending and check cashing, and how do you interrupt that? But would love to get yours and others' perspective on that as well.
Yeah, no, thanks for the question. I think that is a very important question, and one that we've been investigating for a number of years. And so we know that all of our customers, there's a proportion of our customers that are using payday lending. And so we actually did quite a bit of research with these customers, because they are customers of banks and credit unions, but they still are going to these other options. And so we did actually a lot of research to understand why. What was driving them to these really high interest kind of options. And there was obviously a number of barriers that came up. Some of them were perceptual barriers around not wanting the banks to know about, the challenges they're having. And I think that's a trust issue. So all of us as, financial institutions need to build trust so that customers can come talk to us when they are in need. And I do think, do we not have the product solutions that allow us to address this, like microloans? Do we not have that product? And is there an opportunity to launch something in market that is much more affordable? And so obviously many institutions have looked at this and how do we solve this together? Because I think there is a perceptual gap, there is an actual product gap. And so that is something that we've been looking into. And with our broader ESG strategy under social, we're really looking at vulnerable communities. We've put out our commitment to ESG. But looking at how can we double down? How can we partner to elevate that social element of ESG? And I think you're going to see a lot more focus in Canada and the US as all organizations put out their ESG strategies, which will absolutely focus all of us on S and the vulnerable communities. And so I think there's a lot of momentum there as well.
So yeah, I do recall a product development in my in a past professional life that was exactly that. There was a digital microloan, shall we say, that gave that convenience, more importantly, the anonymity of getting that cash inflow just in time. And my recollection is it did not rely on a credit check. And again, there was a data connection there. If you were able to measure money movement and then figure out what amount could be lent, I think that was part of the solution. And a solution like that at scale would certainly address at least part of the problem. And certainly that solution was very successful in the credit union space. So there's probably more to be explored along those lines.
And at least from our research at the Financial Health Network, what we see is often a timing mismatch in terms of cash flow, right? The reason these products are so critical is they can offer a real time, I can get my money real time now in my neighborhood, right? And it's a familiar, it's a storefront, it's right there. But there's a broader issue, I think, across a lot of the economies around the world where people, they just they don't make enough money to live. And the only way to bridge that is through a microloan or a payday lender, but it's a vicious cycle, right? And it'll be interesting to see as we come through the pandemic, how we think we're going to solve that problem. And again, I go back to this isn't entirely the burden of course, the financial institutions. There's a whole ecosystem that's required to elevate consumers to a point where they make a living wage. They have the capability to accrue micro savings. They can qualify for high quality loans. They understand the insurance products that they're buying and have confidence that they're adequately covered. But it would just, I'm curious to know how you think we move that along. That's kind of like a big thing because there's so many components because it really starts at the top. There have to be policy decisions and buy-in at so many levels in order for that to trickle down. But how do we think about moving that forward? No takers. Okay. Well, we've got 3 minutes left.
I think that's why there's no takers, Mimi. There's that's
a big one. We can really dive in on that, right? And each of your organizations is contributing into the capacity that you can. And I think that's important to recognize here, that this is a much bigger thing to solve. But I do want to just take a minute to thank each of you, Jennifer and Jane and Atul, for taking the time today to talk about financial health, for partnering with my organization in terms of using our framework and sharing those findings publicly, and for your ongoing support to raise awareness around the needs of consumers across the Canadian ecosystem. So thank you very much.
Thank you, Mimi, for all the work that you do. It's so necessary, and it's so great to be able to see this data cut from different angles. So it's wonderful to have this as a baseline.
And now we all go back to our day jobs of driving better outcomes for consumers. So this is terrific. It's been wonderful to get your perspectives.
Thank you.
Thank you. Thanks, everyone.
Thank you.